Joining us now is Jason Moser, senior analyst at the Motley Fool. Jason, what are you going to be watching out for coming out of today's meeting, given that Zuckerberg really controls close to 60% of the voting shares of this company?
Yeah, I mean, I feel like this is more or less a discussion that we'll have later on during the day. We'll talk about how ultimately his power was not checked because it really can't be. I mean, that's the whole point of him having this position of power within the company. I mean, I think during trying times, that's when he really wants to exercise this power. That's when the value in the ownership of this business really presents itself. And so I think it's going to be less about shareholder votes trying to check Mark's power and more about, okay, they're not going to be able to change really the ownership structure or who's controlling the company, but they are going to at least bring more transparency and more clarity to the forefront. And I mean, just a couple of quarters ago, if you remember on the conference call, I mean, Mark Zuckerberg laid out 4 points that Facebook, the business, is going to continue to focus on. And one of those points was to communicate more transparently about what they are doing and the role their services are playing in the world. So I think that we're only going to see that drumbeat get louder. But if anyone's hoping that perhaps there's going to be a shareholder victory in outvoting Mark Zuckerberg here, I think they better pack a lunch because I think it's going to take a long
Pack a
time.
lunch.
So, Jason, what successes can shareholders have at this meeting? I mean, they certainly don't want to attend this and put in any comments thinking that it's going to fall on deaf ears. Do they have any sway, and where can they penetrate Zuckerberg?
Well, I don't think they really have any sway. I think really the point of these types of meetings is more or less using them as a platform to voice concerns. And I think that, we're sitting here talking about this today, and I think that you can see that those types of meetings definitely have an impact from that perspective. So I think these types of meetings give shareholders with concerns a chance to voice those concerns. And when those concerns really center around one or two key issues there, then we see more people becoming more aware of those problems and trying to examine ways to perhaps fix them. And so I think that Mark Zuckerberg and Sheryl Sandberg both know this. I don't think they're in denial. I don't think they're going to try to just ignore what's going on here. But by the same token, they are going to be the ones calling the shots.
Have your views about regulatory risk to Facebook changed just in the last few days, given that Nancy Pelosi has spoken out against the response to her doctored video? Elizabeth Warren also putting up a billboard calling to break up big tech. How are you feeling about regulatory risk to this company?
I don't know that my feelings have changed on it necessarily. I mean, I've always found that regulatory risk for Facebook was one of the bigger risks. But by the same token, we talked about this, I think, last time I was on the show with you guys, and we can sit here and dog Facebook all we want in regard to privacy and issues like this Nancy Pelosi video. I mean, the bottom line is, though, the numbers speak for themselves, and people keep coming back to use the platform. And I think it really goes to show how important and how powerful that network effect is. When it comes to social, the biggest network really does win. And when it comes to Facebook, and now that they have Instagram and WhatsApp and Messenger has been broken out, I mean, it's going to take a mass exodus to have any kind of an impact on that user base. So, I mean, from the perspective of breaking the companies up into pieces, I can certainly see for investors where that might not be such a bad idea. It'd be kind of neat to have an opportunity to invest in Instagram versus something like Facebook. I just don't know that that's necessarily going to happen because it does take a lot of work. And frankly, at the end of the day, again, people keep coming back and using the platform. So whether it's Alphabet or Facebook, customers, consumers generally benefit from these big networks, and then that's why they keep coming back and using it.
Look, even though investors might want to see, have the ability to invest in Instagram on its own, the fact is on the back end, and increasingly Zuckerberg calling for there to be more integration between Facebook's disparate services too, I think makes it unlikely that this would happen.
Certainly.
Yeah, I think that's actually pretty scary. I don't know that they can really pull that one off, but I do think it's going to be really interesting to see how they work out that strategy of becoming a bit more of a private messaging style service while still adhering to that public platform that's so valuable to the business. I mean, they've made points in numbers of quarters here where they really want to focus on continuing to build out that public platform for the millions and millions of small businesses that they help around the world. So that's going to be a little bit of a delicate balance there, because they want to take that direction and becoming a little bit more of a private message-based service, but they also need to maintain that public square as well. So it's going to take some diplomatic efforts, I think, on their part.
Jason, Uber set to report earnings after the close today, its first earnings report as a public company. What does Dara Khosrowshahi, the CEO, need to tell investors that's going to instill some sort of confidence in them that can boost the stock price above its IPO price of $45 a share?
Yeah, I think he just needs to tell investors really when they're going to start making actual money. I mean, I think the one thing you can expect from this company for the coming quarters is uber large losses, really. I mean, they're not going to be making any money really in the near future, and I think that's the biggest concern, particularly in an environment right now where the market is starting to seem a little bit frothy. I mean, there are a lot of companies here that are going public, a lot of these growth style companies that they don't really have any profitable business model yet to speak of. They need to paint that picture of a clear path to profitability. I think with Uber, it probably should be pretty easy for them to do that, considering the ways that they're using the network. I mean, this isn't just a ride-hailing service anymore. There's a food delivery service there, and a very meaningful one as well. And if you look at Grubhub as a competitor, there's a profitable business model there. And so talk to us a little bit more about how Uber Eats plays into the mix there. Talk to us about how you're going to find that path to profitability, because I think it's reasonable to assume, at least in the near term, costs for running this business are going to go up. And for investors who are thinking that really the end game here is self-driving cars, that may be the case, but if you think that those self-driving cars are coming on those roads within the next 10 years, I think it's a pretty naive assumption, to be honest with you.
Wow, 10 years. I mean, wow, okay. Jason Moser, senior analyst at The Motley Fool. It's always great to have you. Thanks for joining us on Cheddar Business.
Thanks, guys.